I wanted to have this video today just to go over a little bit more in detail a previous video that I put out about side hustles and people who get 1099s and that they need to incorporate their business. I wanted to do a little bit deeper delve into that because this comes up frequently, especially when I look at the barber and hairstyle industries, as well as DoorDash, Instacart, Uber drivers. I see this quite a bit. So I just wanted to do a little bit more of a in-depth view of it. So come on, let's take this journey together. First, I want to give you a disclaimer that this is for educational purposes. I am not representing anyone unless we have an engagement letter. So please make sure that you do your own research. First thing I want you to do is I want you to incorporate your business. So 2026 is right around the corner, less than a week actually. So if you are living off of your side business, I think you should incorporate that business. Now, there are different structures, as you can see, that you can use. One, which is very common and easy and doesn't cost as much money, is to set up a sole proprietorship. That's like a mom and pop shop, a side hustle that you may be doing, just doing hair on the side, or you may be doing the Instacart, DoorDash, and you're just taking a couple of drives here and there, doing a couple people's hair here and there. But if it starts to be a little lucrative, I think you should consider incorporating because there's a lot of benefits to that. And what I find is a lot of people who have 1099s, they didn't expect to get it because they did it for a short period of time and they didn't realize that the IRS sees that as a business. So with a business, when you have income, which they want you to report all your income, they also want you should also have deductions that go against that income, which then lowers your tax liability. Another thing with that people don't really realize when they have these side hustles is that when you're a sole proprietor, they're looking at you as all the income is yours. So you don't write off salaries, doesn't matter what your expenses are, but anything you make over $1 is going to be taxed. And you're going to be taxed at 15.3%, which is Medicare as well as Social Security included in the number. And if you don't make estimated tax payments, it's going to raise up any other income you have coming in your home. If you have any W-2 income, if you have other sources of income, it's going to add to it. So this is why I'm trying to hopefully educate some who are interested in this, especially those who are doing a lot of clients or having a lot of drives. I mean, this will behoove you. So a sole proprietor, like I said, is you just all your income, whatever expenses you have, you do a Schedule C on your 1040 when you file your taxes. You don't have to do a Schedule C every year if you're not doing business every year. But the problem with that one is you have no protection. That means your personal assets are just as susceptible to your business assets because everything's combined. You're not an official business because you did not separate the two. So everything's exposed. So that's the problem with a sole proprietorship. So the next thing that you hear a lot of people saying LLC is if that's the magic word. What it is the difference between a sole proprietorship and an LLC, which is a limited liability company, is you are limited in liability. So if someone wants to sue you, then they're limited to the assets within that company, not your personal assets. Personal assets meaning your house, your car, your money, whatever assets you may have would be open to any kind of neglect or liability case that could go against you. So limited liability gives you some assurance. And those who are, I would say if you're making income at least 40 grand or more, like when I say income, that means the income you're making less the expenses that you're incurring for the year and you're netting about 40,000, you should consider a tax distinction called an S corporation. That is still an LLC. But the thing is, you are allowed other things you can write off that you cannot write off with an LLC because an LLC, just like a sole proprietor, they don't care if you pay yourself or not. People with LLCs usually will take an owner's draw or an owner's distribution, but at the end of the day, all of the profit that you make in that company, it's taxed and you don't write off your salary. So, and if you don't pay taxes, guess what? You're going to have a big 15.3% tax bill added to your liability and possibly a late penalty charge and underpayment if you don't pay by April 15th, which is another misnomer. A lot of people think, oh, I've got to get my taxes done by April 15th, but really IRS wants you to pay any liability by April 15th. You can do your tax return anytime during the year. Yes, you can extend it, but that doesn't extend if you owe them. So that's just a tidbit I put in there. I will not be discussing C Corps, partnerships, or multi-member LLCs in this discussion, but just a little snapshot. A C Corp is another distinction of a corporation, but I'm not going to go into that today. So how do I incorporate my business? That's something I get asked all the time. The first thing you want to do is, if you live in a state where you have state taxes, some people don't have state taxes, but what I would suggest is you go to your state registry and you search the name that you want to use for your company. Make sure no one has taken that name yet. And if the name is available, then register the name with the state that you are operating in. And then immediately go to irs.gov and apply for free an EIN, which is an employer identification number. That is just like a social security number, but it's for the company. And that's the number you're going to use every time you reference your business. So whether you have an LLC, whether you use the tax distinction of an S corp, that's the number you're going to use. It's very important because also the state wants to use that number as well. Well, I'm assuming. I know in the state of Maryland they do. Other states do different things. So I can't speak to that. I can't say that's applicable for every state. But an EIN is definitely a federal tax ID number that you do want for your business. Now, in your state, every state, like I said, the formulation of documents is different. If you're going to do an LLC, they usually ask you to do an articles of organization. Um, you also will have other documents we can get into later, but the basics is that one. If you did a corporation, like a C corp, it would be articles of incorporation, but we're not doing that. You're doing organization if you choose an LLC. An LLC is a nice distinction because it's a little easier. It does cost you a little bit more money to file than than a sole proprietorship, but it will allow you to have some protection, like I said, limited liability. So when you do this, think of a trademark that you may want to protect. Like if you create a logo for your company, if you have your name, you may want to trademark that. That's something else you can look into to see what your state would charge. If you want to go through, that's only on a state level though. If you want to do it federally so that no state anyone can operate with that that logo, you would have to go to the US Patent Office and apply there. It's a different separate charge. Okay, so the next thing I want to get into is what you essentially have to have if you're going to start a business and be successful with this. You have got to separate your personal bank accounts from your business accounts. I've seen too many entrepreneurs who own businesses and they're operating out of their accounts with both. You cannot do that because you're open. It defeats the purpose of having an LLC if you're going to have that money sitting in your personal checking account. And it also defeats it if you're using a lot of personal expenses in that business account as well. Um, I've seen people do that because what happens is IRS will count both of them as, oh, well, that's just theirs anyway. And then you're susceptible. So you have to protect yourself. So I would advise that you have a separate business checking account, a separate savings account for your business, as well as a separate credit card account. That will keep everything separate. A lot of people mix them up in the beginning, but I'm just trying to help you in the beginning to start off on the right foot. The next thing that's very important if you want to have accurate records is to set up an accounting system. Whether you use QuickBooks, Xero, or any other system out there that you choose, you need something to keep track of the ledgers, the activity that's going on in your company, the invoices that you're putting out, the sales that you're making, the expenses you're paying. You need all that to hit one system so you can come up with financial statements, which we'll go over a little bit later. It's the ABC version. I'm not going to go in detail and bore you to death. I just wanted to share with you some things that you're going to need. You also need to come up with procedures on how your business is run. So if you know you need a payment system that's whether it's Square or some other payment system to take payments, if you're going to use Cash App or Venmo or PayPal or whatever it is, you need to set all that stuff up before you start business. Again, there's so many payment platforms you can use that will allow everything to collapse into one. I would also suggest that you download Mile IQ or Hurdle if you're going to keep track of mileage with your business because those give you a good record. It gives a log, and that's something that IRS definitely wants to see. If you get audited, they want to see a mileage log if you're claiming mileage. They don't want you saying, "Oh, I think I did about 500." No, you need to have records showing what you did and it where to and from. And these apps are really good. It's worth the investment. So, just real quick, financial statements that will help you understand your business and where you are. is the first thing everybody likes to focus on is a profit and loss statement. What the heck is that? That's all the income that you made for that period minus all the expenses that you paid gives you your gross profit. That's before taxes, amortization, depreciation. I mean, you probably start out as cash basis, so you may not get into all the accrual terms I just mentioned. But IRS determines expenses that are deductible when you do taxes is based on ordinary and necessary expenses for that business. There's a lot of things that you can write off legally, which will be great to decrease the income that you have coming in. I put payroll on here because people don't seem to think about that. I know some people, I know one company right now that's paying payroll out of Square, but not really keeping track of how that's going in terms of payroll taxes and reports that have to be filed. Every state is different. You have to make sure that you know the compliance that what your state requires. And that this is pretty serious. You want to make sure you pay yourself a salary. Again, if you're just a normal LLC without the S corp distinction, then you can do an owner's draw, but you still have to keep track of all of those draws so that you have an idea of how much you took out of the business, because you won't know where your business stands if you don't do that. But in S corp, you have to pay yourself a salary, and you also have to file annually every year a separate tax return, which is an 1120S, which that same income or loss would flow to your 1040 through a K1 that you would get from that company. That would also allow you to be taxed at the ordinary rate, which is a benefit. You're not double taxed on that money because the S corp level will not be taxed on the income. So that's kind of what I was getting at when I mentioned tax strategy in the next bullet. I mean, this is something to think about. Again, it depends on how much money you have coming in. But paying yourself a salary is a good thing, a reasonable salary to help you see where you are. Some people tend to use, oh, they got all this money coming in and they think it's theirs. Well, technically, it's the business. You should be reinvesting in the business, and to keep you from treating it like a piggy bank, you pay yourself a salary. That makes it easier for you. Your net income, your net loss, that's exactly how you performed at the end of that period, whether it's 1 month, 3 months, 6 months, 1 year. And this statement is important because if you decide to go to the bank and apply for a loan, any kind of loan, whether it's a mortgage, car, they want to see, well, how are you making your money? And so that's a tax strategy that you'd have to discuss with your accountant, or if you book a consultation with me, we could discuss that as well. This is very important. You want to make sure you're tracking how your business is doing. Another statement that I want to go over is the balance sheet. In the very beginning, it's probably just going to be a balance sheet is your assets equals liabilities plus equity. Liabilities are what you have to pay: rent, a mortgage. This is business related, not personal. And equity is going to be the investment you've put into the company. So in the beginning, it may just be cash, which is whatever money you have at the end of that period, end of the year. And it may just be equity, which is equal to the cash that you put in because you may not have much else. But as you build inventory, as you have debt, things like that, it will flush out on your balance sheet. The bank also will want to see that. And you should do bank reconciliations, which tie your bank statement to your balance sheet, which means you have to reconcile what's in your bank statement. Hey, I got bank charges, I had deposits come in, I had expenses come out, and that all comes down to the ending balance of your bank account. That should match your bank statement. Another thing too, you want to make sure that all those third-party payment systems that you're using, that they all interface with the accounting system that you set up in the very beginning. That's why I put it here, because you want to they will send a report to IRS at the end of the year to state how much money was received by your business. And all those monies have to add up when you decide to do your taxes. Trust me, IRS is not turning any stones when it comes to trying to find out loopholes that companies have been doing in avoiding taxes. So you have to keep that in mind. They can definitely tell. So last thing I want to say to you today is I suggest that once you develop these systems, that you come up with a way to look at your financial statements on a monthly basis so you can see how your expenses are going, how your income's going. In the beginning, usually you may have some losses, and that's okay. The main thing is coming up with strategies to generate income and then eventually making more income than the expenses, but you have to watch it. If you don't watch it, you have no idea where you are. I would suggest that you put money aside every time you make money because, and that's where the business savings line comes from. Because there's going to be times where your business may have cyclical periods where you don't have much money coming in. You want to be able to survive those times by having some cash savings to help you float until you're able to get back moving again. So that's where I would say probably about 20% of what you make, you could put aside at least 3 months worth. As time goes on, 3 months worth of cash in a savings account will help you float a little bit so you can get back to the busy time of your cycle when you have a lot of business. And then in terms of what you pay yourself, you should probably pay yourself. In the beginning, it's probably going to be meager unless you're coming in hot with making a lot of money. Might want to pay between, it's got to be reasonable to what it is that you have coming in. So I wouldn't be overboard, but I would look at your income and discuss that with your accountant on what you think is a feasible compensation because that changes. Um, Long-term goals, like I mentioned, if you want to purchase a home, if you want to purchase a car, your credit rating, all that stuff adds up when it comes to this, and they want to see what's going on. So I know a lot of people want to have losses every year, but IRS expects you to make a profit by your third year in business, and most companies don't make it past the first five. So again, they don't have a sound system to begin with, which is a lot of times what happens. Or they come in and they're just doing things very reckless and they're not serious about their business. But one thing I would suggest to you, this is your business. You have to make it what you want it to be. So if you're just going to willy-nilly just go through and just get paid every week and not pay attention or not use what you have right at your disposal to benefit your life. And that's one thing I would suggest to those, especially the individuals I see that they have their own business already. If you're working, say you are a hairstylist and you're working in a salon or a barbershop, all the money you're making, you're paying booth rent and they give you a 1099 end of the year. You should have been keeping track of all the things you bought, the hair you had to buy, the products you had to buy, back and forth to work, your meals, all, training, everything. So many things you can write off against that income, and your income won't, and paying taxes on a quarterly basis will keep your tax liability down when you file taxes. There's a lot that goes into it, but again, I put there my website if you'd like to book a consultation with me. I wish you much success, and I just figured I would put that out there to start this year off so that you will be free and clear and ready to begin a new year a new way. We'll have a wonderful Saturday, and I hope to talk to you soon. And like and subscribe my page if you enjoyed this video. Till the next episode, bye.